the source is from Bloomberg. So this one it says the Hang Seng Index sinks below net asset for the first time since 1998. Wow, this is really for value investors. This is like wow, a bargain, because you have to understand the point of view from a value investor, from an investor's point of view versus a speculator. You see, when a speculator sees this one, wow, they say, oh my god, people lose money, people lose money. But for an investor's point of view, when it drop to so low, then it becomes a good bargain, you see. It's kind of like you go to supermarket and you see like, wow, Tesco groceries. It's down at 30% discount. Wow. I think the number of people at Tesco will be crowded. But the stock market is different. The lower the price is, the less people are there, you see, because they are more interested in because most speculators, they are interested to buy high and then they sell higher. See, they are just interested in the price movements. They are not interested in acquiring good assets at a cheap price. You see. Okay, so the first thing is this is a good news because it's for investors. They can buy it low. But now when prices are higher, it's also a good news for the investors as well, you see, because they can choose to sell. So as long as you have the right temperament, whether it's priced high or lower, you can do it to your advantage. Most important is you don't do the opposite things. Like example, if the prices are low, then you don't panic and you don't sell. I think that's logical. And when the prices are high, you don't buy and try to sell higher. Try to sell to another bigger fool because you might end up as the fool. So as long as you follow those principles, I think you'll be okay. So all right, come back to here. Now, Hang Seng Index. Now, when you see a word index, it means it's the biggest company in that particular country or region or something like that. So index generally it means it's the biggest companies, like KLCI index. KLCI index means it's the biggest 30 companies in Malaysia. S&P 500 is the biggest 500 companies in US. Dow Jones Index is the biggest 30 companies. Now, so when you see Hang Seng Index, it means it's Hong Kong, because Hang Seng is in Hong Kong. And the top basically what this means is the top biggest companies in Hong Kong is selling below net asset. Selling below net asset means it's a book value. So it's usually when a company is big and have very reputable and many people know it, it should be selling above book value, because of its size or its stability or its brand name or whatever. Most of the time it should be like that. But here it's selling below book value, So it's wow. And of course this one, it says here, for the first time since 1998, that's also another clue already, because now it's nearly 20 years since 1998. 2008 and nearly 2018, so it's now about 18 years. So which means that what this title is saying is the Hang Seng Index falls below one of its lowest level since 18 years ago. So it's kind of like wow. And 1998, I'm sure if you all know, then it's the Asian financial crisis. During that time, a lot of Asian stocks, they plunged down quite a lot, and many wealth has been changed hands at that time. So every time when the prices are low, wealth changes hands between the. It doesn't grow from the poor to the rich or from the rich to the poor. It goes from the less sophisticated to the more sophisticated ones. So if you are the more sophisticated ones, whether you're poor or you're rich, you gain wealth. And on the other hand, if you're the less sophisticated ones, you lose money, because you will get panic or you over leverage. Sometimes you over leverage and they have margin call, you cannot afford to pay the money installment, and you don't have collateral, then you face margin call. So I guess in that sense, it is a fair game, I would say, if you view it from that point of view. If you're not sophisticated enough, then your money should go to the more sophisticated ones. Casey, you have anything to add here?
No, let's move on. Good. You're excited.
Okay, so this is the title, and then the reason is because it says they concern over capital outflow and China's economic slowdown, which causes the Hang Seng Index to a bear market. So this is the source. You instead of you type, you can actually copy this, then you can just paste it here in Google's spreadsheet. In the browser. So you can just view this one. Okay, so in the meantime, let's go on. All right. Most of the time, I do not see the reason. Most of the time is because people fear, then that's why the price goes down. If people is optimistic that the price goes down, it doesn't make sense. So most of the time, so regardless of what news, you can just conclude it's because of fear. Now, then, this is a chart, also a pick from Bloomberg, which I like. This one shows the price to book value of the Seng Index. So normally you can see on a normal range it's probably traded between 1.5 to 2 times or so. 2.5 times probably is on the high side already. So you can see like in year 2000, in year 2000 it went up to 3.5 times, and the reason is because of the dot-com bubble, the dot-com bubble. So before it burst, it went up very high, and then after that the market crash and goes down here until 2002 or 3. Here I'm not sure the reason, but here it doesn't go down that low. It goes down to about 1.3 times or so of its book value. Then went out again until 2007, just before the market crash again. Quite high, about three times plus, and then it went down. This one, subprime crisis. So subprime crisis, it went down close to its book value, and now again here. Wow. So when you this point is equivalent to 2008 or 1998. That's like wow. very good news for the investors. And if you're sitting down idling on cash, then you should really start working. You should really start working. This kind of opportunities doesn't come often. You probably the next one we have to wait 5-10 years time. So you should really start working.
And looking at the chart, that's quite a long time to get into the game, right? Since 2011, it was hovering around like book value 1 to 1.5. So during that time, I think a lot of value investors would have gone in already. So now it's like still going under, and I guess patience is very important here.
Yeah. So 2001 onwards, it's from about 1.5 times to about 2 times. So it gradually goes up, the price to book value. And the reason why is because probably I guess as the market gets better and better, people's perception of the market gets better, then people are willing to pay higher and higher price. But the thing is, the book value didn't grow that fast, you see. Only the market price. So basically, the rate of the growth of the price goes up faster than the rate of the growth of the company's book. In a way, you can view it like a property, the property market, where the property price go up at the rate faster than the rental going up. So when you take price divided by rental, people are willing to pay higher and higher price per dollar of the annual rental, which I think now is on the high side. So I think recently it's dropped a bit. So generally, when it goes up too high, it will come down, and if it goes down too low, then it will eventually go up again.
Yeah.
Now, if we talk about the potential gains, if you are buying at one-time book value, which is somewhere around here, now if you buy a one-time book value, and even if you sell at normal price, I say 1.5 times or so, you gain not only 50%, you gain 50% plus the growth in book value, plus dividends. So if the book value the book value grows because the company grows, which means basically the company grows bigger and bigger in size. So if you add in that plus you add in a dividend yield probably about 3% or so. So your returns are pretty good. Of course, that depends on how fast the one-time book value grows to 1.5. If it goes up in one year, then of course your return is very high. If it goes up in 2 years or 3 years, when you divide it off by 2-3 years, and you plus growth in book value and plus growth in dividends, I think your returns will be pretty good as well. So that's why one of the key points of value investing is buy low. It's not to buy high and sell higher. That's speculators' point of view. Value investors' point of view is always on buying low. So once they buy low, even if they sell at a fair price, their returns is enormous and their risk is extremely low. Because you put it on the other hand,